I welcome you back on CIA Part 2 study course in which our today's topic is about Unit 7, which is sampling and statistical control. The study material which I'm focusing or based on which I'm making my video lectures is from GLIM. This is a brief introduction about myself, and if you are interested, you can pause the video, you can read it, my background, my qualification, from where you can engage that whatever I'm trying to convey based on my theoretical knowledge or experiences is coming from varied experiences which I had it in my professional career and in my academic journey. This is a snapshot of the entire CIA Part 2 exam syllabus. The GLIM has divided the entire syllabus into 9 units. We have completed till Unit 6, and our today's topic of discussion is about sampling and statistical quality control, which is Unit 7. Here you can also see the percentages of coverage, or this is a rough estimation of how many MCQs come from each unit in CIA Part 2 exam. So this unit, the CIA Unit 7, approximately comprises of 13% of the syllabus, and approximately 13 MCQs come from this unit. This is a mind map or pictorial representation of the entire Unit 7, in which we will be talking about the statistical concepts, sampling concepts, what is attribute and what is variable sampling, and what are the key statistical quality control related matters. So this is the snapshot which you can have a better understanding of grasping that all these key concepts you should familiarize yourself with, and this is what we will be discussing in the upcoming slides. The first and the most basic thing which one needs to understand as an auditor, that our main job is to give an assurance on an area of the businesses, and about what kind of assurance. The assurance is about whether this area of business which we are reviewing is in compliance with the applicable policies and procedures. The area has proper controls within to mitigate or manage the risk pertaining to that area, and ultimately the management is able to achieve the overall organizational objectives. To carry out internal audit, the internal auditor performs their audit procedures, and in order to perform the audit procedures are nothing but simply the way we do or the steps that we follow to carry out our internal audit engagements. And in order to apply audit procedures, you need data, because then only you will be able to affirm whether the entire processes are functioning well or not. And to collect that data, the problem now and even before was there a humongous level of data in a different form, in a different quality, in a different priority. So the data is huge. So which data to pick up in order to review and then give our opinion based on that data review to the management or to the board that everything is going well within the organization. So in order to pick that sample data or that small set of data, we use a technique called sampling. So sampling is nothing but a representation of the entire population of a data. So we have that big pool of data, and then we use a sampling method to deploy and to get a data which we can easily review within manageable time, and then give our opinion on. And in order to provide the opinion on, we have two different forms of sampling. We can use a judgment based sampling, we call it non-statistical sampling, or we can use mathematical arithmetic approach by which we use calculations in the form of numbers to assess that what is the population and which data sets or which part of the population that we can select based on different statistical method in order to form our opinion. There are mainly two types of data. One is discrete variables, in which we have to just form the opinion on the overall control within the process, either in the form of yes or no, or in compliance or not in compliance. Basically, we call it an attribute sampling, in which we basically look at the characteristic of the controls which is being deployed within the process. The other form is a continuous variable, which is mainly based on numbers, either monetary numbers or some other kind of a number, in which we give our opinion that whether those numbers which are being provided for in the books, whether these numbers are correct and true and fair or not. And for that we use a variable sampling method. Always remember that we can visually display the data in the form of charts, histograms, or we can use arithmetic, mode, median, and mean approach, which means that we can use we can display the data, the entire population, in arithmetic form, in numbers. So here our in the initial slides, our main focus is when we are not using a chart, rather we are using arithmetic form, which means in numbers we are using the entire population. So when we have the entire population, we have to see the nature of the data within the population. So if the data start, let's say, from 2, then it goes to 4, then 6, then goes back to 4, and then 2, which means that there is a slight the numbers move from low to high and high to low, and in a very systematic order. If that happens, we call it's a normal distributions, which means the entire numbers or the numbers in the population is very symmetric. It's very similar, right? Not identical, but similar. So for that, there are 3 elements in which we call it mean, mode, and median. These 3 elements of these 3 concepts of the statistical method will have a common numeric number. What is mean? Mean is basically nothing but an average, which means you just take the average of the entire data set, and that might come as 6. Okay, then median is the center number. So whenever we have to identify a median in a population, we either arrange the entire population in ascending or descending order, and then we pick up the center number. So we go by the numbers, not, for example, if we have 2, 4, 6, 7, 6, 4, and 2, then the center number is 7, right? So that will become our mean. Median you can just remember by middle number. And what if there is an even numbers, like four numbers? Then in that case, you calculate the both middle numbers and then divide by 2. Just take an average of that, and that average is basically your middle number. And the mode is basically the most frequent numbers which is coming. For example, if we look for the height of students in a class, or if we are looking for a common passing or exam score in the class. So if there is a common, like there are 2 students with a 70% mask, and the remaining are all either less than that or more than that, so the most common 2 numbers, if that population have, that is called our mode. So all those 3 formats or forms of concepts which we apply on the population, if it comes with a single same number, then we call it the data is very symmetric. It means the data has a flow, which means that if the middle of the data is our zero, the left side and the right side, the numbers which are in negative or in the positive, they both represent they are equally distributed in the entire population. Why we look for such kind of complicated distribution of data within the data sets within the population? Because then we can take an average of or a number or a sample from the population which is more close to the average, and we will have a sample of which represents the entire populations. If the data sets is dispersed and which doesn't have an equal symmetric values in the data sets, then we have to increase our population size, and then we have to take a bigger chunk of sampling information in order to have a good representation of the entire population. So I hope by this you might be able to grasp some of the concepts. So the basic concepts behind looking at the data or the population or the information is there are two methodologies. One is about measure of center. Measure of center means that how data are symmetric close to the center. If you look at the first graph, that we look for mean, median, and mode. And the other way of looking at the data is what it calls measure of spread, which means that how the information or how the data is spread throughout the population. And for that we use range and standard deviation, which give us that how much the sample data is dispersed from the average. Range is simply when you take the highest number and minus the lowest number within the entire data set, you get the range from 1 to 5. So 5 minus 1, you get the 4. So that is the range. That is not somehow is being part of our syllabus, so I will not go into detail. But the other concept is standard deviation. This is where we have to touch base upon because this is part of our syllabus. Standard deviation you might not have to calculate, but you just need to have the understanding. It just tells us that what is the variation of the data from the center. So how disperses from the average. So center is the average, the data is. So if it is widely dispersed, then we have to increase our sample. If it is closely and the majority of the data falls within the center, if you look at the first graph is a very beautifully bell curve, which means that the most of the data is central, located at the center and close to the average. And if you look at down two graphs, these are asymmetric frequency distribution, which means that the population which we have took, the data is dispersed and it is more skewed or inclined toward the right in the second graph, which means that the average is greater than the median, that the middle number in the data, the average is greater than the middle number. So the entire population is more or the average of the data is more than the most middle number of the entire data. And the other one, the third graph shows that it is completely opposite of the previous one, which is that it is more skewed toward the left, which means that the median, the middle number, is greater than the average. Why we need to ascertain this kind of data representation? Because accordingly we apply statistical approach in order to get a good sampling data that is representative of the entire population. So let's have some more discussion on standard deviation and confidence level and normal distribution. Basically, as I have mentioned you that our data, we have a population and we have to see what is the characteristic or what is the nature of the data inside that population is. If it is a normal distribution, which means there is symmetric it's in a symmetric form and the data flows symmetrically in a bell curve, then it means that there is less dispersion, means that the majority of the data lies near to the average, and we can take a smaller sample size which might be representative of the entire population. However, if the bell curve is flat, which means that the data is dispersed, even if it is a normal distribution, then we have to increase our sample size in order to get a better representation of the entire population. Confidence level and confidence interval, these are the concepts. Confidence level give us that what are the parameters under which we believe that the population parameter lies. So if these are normal range, maybe you can define your range based on your own area of review. For example, if there is production loss within 2% of the entire production, then it is within the confidence level that it is fine. But if it is beyond that, then we have to look at for more sampling in order to ensure that our review or the opinions which we are giving is based on the right sampling method. Confidence interval will be that after how long that the data is representing the entire population. Maybe you can take the sample from one shift, maybe you have to take it from second and third shift as well. The interval could be after a certain period of time, it could be a certain activity level of time, it could be after a certain number of transactions. So the interval, you have to see if the intervals are bigger, then you have to increase your sample size in order to get a good sample that is representative of the entire population. If it is the opposite, then if the intervals are less, or maybe it's a continuous process where there is hardly any interval, or it's a 24/7 approach, then you might have to take a lesser sample that might be a good representation of the entire population. So if we want to increase our level of confidence, then we increase our population size. This is how we determine that the most of the data will be a good representation of the entire population. And also the parameters under which we are looking for the data. For example, if we are looking for a production loss of 1 to 2%, then 2%. But if we are looking for maybe 5% or 10%, then we have to increase our sample size in order to get more samples, in order to be more confident about ensuring that whatever the opinion we are giving is based on the sample data, which is a true representation of the entire population. The wider the interval in a data, the bigger the sample size become, and the more confident we become in giving our assurance on the area of the businesses which we are reviewing. So as we have discussed in the previous slide, that there are basically two ways by looking at the data. The first way is by looking at the measure of center, that how data is close to the average of within that data set, and the measurement of dispersion, that how the data is widely dispersed from the center. And under the measure of center, we have discussed that we have three main concepts which we look at: mean, median, and mode. And in the when we are looking at the dispersion, measure of dispersion, then we have two concepts. One is standard deviation, which looks at how much the data is deviated from the center, from the average, and the other one is range. So here is some more example of the similar kind of concept when we are discussing about dispersion. A few things to note that we as an auditor, whenever we go for an audit, we take the entire we look into the entire population, and before we put our all effort in taking out a sample and just doing a review, we rather prefer to do a pilot sampling and take some sample from the population into different data sets and review for and apply statistical concepts to that sample data to get a few numbers in order to ensure that the samples which we are taking is a good representation of the population, and then we go for our actual sample. So first thing which we want to determine is standard deviation, that how much is the data sets is how much dispersed from the average, from the middle number, from the average number, and that we do it through standard deviation. So we have a calculation based on which we look at the data in the data sets is basically either +2 or -2 from the average. It might give us that 2% of the time people might not punch in their attendance, so that could be give us 2% of standard deviation from the average. Then standard error. Standard error is quantifies the variation in the means from multiple data sets of measurement. So we do not take one piece of pilot sample, but rather we take the pilot sample from a different data sets within the population. It's same is when you go to the doctor and they take a blood sample. So sometime I remember for a few medical tests they take 1 or 2 extra sample just to ensure that they are very much aware, and they are very much or they just want to look at the consistency of my blood results. So they might take 2 or 3 sample just to compare for the same results at a different interval maybe. So in the similar manner, in the audit also we take a sample from a different data sets. Maybe we might take a different employee information, particular information from different candidates. Maybe we take maybe a certain kind of information from a different production dates, just to ensure that the variation remains the same, in whether the variation remains the same or not. So what we do is we look for the standard deviation in each data sets, and we take out an average of all the variation, and to quantify whether the variation, the means from multiple sets of measurement, and see what is the standard error. So this will give us the holistic view that these data sets are how much varied in themselves within the population. So this also we do. And then the third thing is coefficient of variability, which define consistency, that we apply that we divide the standard deviation over the mean, the average, and we get a percentage. So if the percentage is lesser, it means that the data is less dispersed and we can take a smaller sample. But if the percentage is higher, consistent, and if the percentage is higher, it means that we have to take more samples in order to give our opinion and based on a true representation of the entire population. So these are statistical concepts. You will not be asked to apply and to do the calculation, but you need to have a good understanding of these concepts for your exam. So this is how it looks like when we put it on a chart. Here you can see that these lines, the different color lines, these are different data sets, and within that data sets we try to identify the standard deviation from the average within that data set, and when within a single data set. So each line represents each data set, and when we combine the review of standard deviation within multiple data sets, then we come across an average of how much is the overall data set is dispersed from the average mean. So here you can see standard error on both sides of the means of the means. So this is a graphical presentation, and I hope that I'm able to explain it to you. So when you have one data set, you look for standard deviation. When you have multiple data set within a population, you use a standard error in order to ensure that how much the data could be dispersed within the data sets of that population, and accordingly you make your decision that how big or small you have to take a sample that could be a good representation of the entire population for your audit review. So as we have mentioned in our earlier slide, most probably in the introductory slide, that we use the sample in order to review and give our opinion on based on the sample on overall population within that area of review. And while doing that, we can use statistical sampling method, or we can use our non-statistical, which is more of a based on the auditor's judgment, that whichever the data they prefer, they pick and choose, and they review based on their experiences, obviously. Why the internal audit methodology allow auditor to use judgmental sampling? Because not all data can be very much quantified or could be applied a statistical approach. There are pros and cons to both type of sampling. Some of the benefit of judgmental sampling, that it's first of all based on the experience of the auditor. It is less expensive, it's less time consuming, and it doesn't need a very sophisticated statistical knowledge to apply and to pick a sample from the entire population. And it gives more autonomy to the auditor to pick the data which they believe would be more relevant in order to achieve the audit engagement objectives. However, the drawback or the disadvantages of having that judgmental is that the auditor might not be having a good judgment, or they might not be well experienced in getting that particular data, which might be a good representation of the entire population. It cannot be quantified statistically, which means that the standard deviation and the error rates and this all and the sampling risk cannot be quantified, and thus there might be a possibility that there might be a certain occasion when the work of the internal auditor might be questioned or challenged by the auditee, because it's more based on the judgment of the auditor rather than giving any comprehensive calculation based on which they have reached to their conclusion. However, on the flip side, statistical sample could overcome certain kind of drawbacks of judgmental sampling, which means that we can more quantify, we can have a standard error rate, we can calculate the standard deviation, and it is more efficient. We can use different softwares. Basically, in the big banks, in financial institution, you will find there is sophisticated softwares that are being run on hundreds of transactions just to identify anomalies, or pick and choose the sample which one might be more relevant to the auditor. However, the disadvantages of having this, first of all, you need a situation where the data is of a good quality and a good representation of the population, and where you can apply these statistical tools or your statistical knowledge to that data. And it might be that that it might cost you more, because sometimes softwares or sometimes getting a good auditor with such kind of a skills might be more expensive. It might be more time consuming, and obviously needs the knowledge of statistic. So there are pros and cons to both. You can use within one engagement maybe both concepts. At certain areas of the business you can use judgmental sampling, it's in other areas you can use statistical sampling. Some more concepts related to sampling. We could have a sampling or a non-sampling risk. Sampling risk is simple. When we take a wrong sample, which is not a true representation of the population, and thus we reach to a wrong conclusion. So that is a sampling risk. Non-sampling risk is not associated with the wrong obtaining a wrong sample, but rather that the auditor has taken the correct sample but did not apply maybe the proper audit procedures or interpret properly the conclusion of the sample, or it could be that he miscalculated the sample and reached to a wrong conclusion. So mainly we apply the sampling risk either in the form of sampling risk or a non-sampling risk. Selecting the sampling approach. So which approach to take? There are a wide range of approach. Mainly the internal auditor, they use their best judgment that what approach would be more appropriate in the given situation. For example, if I just want to have an employee background check, I can go for a random sampling where I just took out of 5,000 employees, I just pick maybe 50 employees randomly, and just reshuffle the entire list and just pick and choose without being biased to anyone in terms of color, race, gender, or origin, or background qualification or title. I just randomly take and see whether their background check has been carried out or not. The other could be interval sampling, where you look for the nth item within the sample. For example, in order to come your biasness, you can say you will look at every 100 employee or every 50th employee, whoever that person is, you will take as part of your sample, and believe that these employees represent the good their background check or these employees recruitment process is a good representation of the entire population. Block or clustering sampling would be where you make grouping within that entire population of employees. Maybe you can say these 5,000 employees are situated in 5 countries, so 1,000 employee in each country. So you take out of these 5 blocks maybe 20% of the sample, 25 or 20%, 20%, 20 and 20 and 20, like 20% from each group. You take a sample from that 1,000, rather than just taking a sample from 3 groups or 2 groups, which is not representation of the entire geographical range of that employee base of that company. So there you do a block. Block could be also done through different designation level, salary scale level, age level, experience level. It could be through any means. So that is called block or cluster sampling. This is how we carry out our statistical sampling, where we first of all determine what are the key objectives. Where are we intending to assess within a process the control design, which we call test of controls, in which we look at overall how the controls are being defined or designed. For example, if there is a lock for a locker, that the lock in itself is a test of control, that they have a lock and that lock open up with a key or a code, right? So that is a control design. Substantive testing is that every time who take the money in or out of that locker follow a certain procedures, and that procedures we spread out through a time frame, and we look for a sample from that population and ensure that every time the money goes in or goes out is done through a proper review and approval procedures. So we know that there is a lock, but then how people approach. It's similar to that there are access controls within the systems. We have access control through the premises, but then people are coming in, going out, so it's not locked forever, but rather there are certain procedures that people have to follow. So in order to test those procedures are also being effective, in order to ensure that the design is able to reap the benefit or the objective of the entire control, in order to manage the risk, we perform substantive testing. Substantive testing is more towards the numbers, transactions, values, and the test of control is more toward the design of the control. We apply the attribute sampling method to the when we are looking for the test of controls. We apply the attribute sampling methodology, where we look at whether the control is effective or not, whether we are able to lock the locker or not, or whether we can lock the room or not, or premises, or the laptops. So that is called test of controls. However, in the substantive testing, the variable sampling is more appropriate, where we test the transactions within a population in order to ensure that those are able to manage the risk. So first of all, we have to identify whether we are looking for a control design or substantive testing, and accordingly we define what would be the population, what kind of information that we needed from the client in order to apply our audit procedures. Once that is done, then determine the acceptable level and sampling risk, so that we can calculate by applying different statistical concepts, standard deviation, standard error, by which we can come across that whether the data sets which we have obtained within the population is a true and good representation of the entire population, and how much it can deviate from the average. Then accordingly we decide on, based on those variables, that how big or small sample size we have to take. Once that is done, then we select that what sampling approach we can take. We can take within that data set a sample data, randomly select a few months or a few days within a month, or a few number of employee, or through interval, maybe every 10th of each month activity we can take, or every 10th of a transaction we can take, or a block where we group the entire data based on certain characteristic, and then we take a sample from each block, just to ensure that the entire population, we cover the attributes of the entire population. Once that is done, then we take our actual sample and evaluate that sample and draw a conclusion. And all this activity is being provided for in the working papers. So whenever we come across any working paper of any internal audit engagement, we know that what was the audit objective from reviewing that processes, what were the risks that we were looking at, whether they have an effective control, have the auditor intended to look for test of controls or substantive testing, and what is the methodology, how they reach to their sampling size, and what is the overall conclusion, whether these controls are effective or not effective. And thus the audit finding goes to the audit report. So this working paper is basically the bridge between the audit engagement objective, planning, execution, and then the final conclusion of the audit report. And all this is being documented, and auditors are supposed to keep this record within the company at a specified period as per the law, if they have, or a standard period of 5 to 10 years. Where an external quality assurance after every 3 years review the document of the internal auditors, to ensure that the auditors has done their job with proper due diligence. And sometimes internally also it can be reviewed by the within the group by the other auditors or the same line managers, etc. Here we are with some more discussion about attribute sample. So basically we have two types of sampling, either attribute sampling, which is about more to assess the characteristic of a control. We call it design of a control or test of controls. And the other type of sampling is variable sampling. So the attribute sampling is basically more focused on discrete variables, which means that either we are looking for a compliance or a non-compliance of a control, and it specifically more pertains to the design of the control. As I've mentioned, that it is mainly used for sampling when we are applying the test of controls, that we use the attribute sample. However, it doesn't mean that it cannot be applied to a substantive testing, but to the greater extent we apply or we distinguish between attribute and variable sampling by focusing more attribute of a control when we apply attribute sampling. Simple example which I have given you, whether you have a lock or not, or access control are being protected or not. Sample size, it depends on following. There are different ways by which you can determine that how big or small sample size you have to take to carry out your audit procedures. Confidence level, if you have a greater confidence, if you want to achieve a greater confidence level, then you need to have a greater sample to give the opinion on that after reviewing that data. If the population size is bigger, then again you need to have a bigger sample size. Expected deviation rate, if you believe that the standard deviation within that data sets or multiple data sets, the standard error is greater, then you have to increase your sample size. If it is lesser, then you can decrease your sample size. Tolerable deviation rate, if you have less tolerability, then you have to increase the sample size. If you are more tolerable, then you can decrease the sample size. While evaluating the sample results, you have to see what is the sample deviation rate and what is the upper limit of that deviation. For example, if you believe that within a range of 2 to 5% of deviation is acceptable, then it's fine. But if there is a over and above that deviation, that become your audit finding. Other attribute of sampling methods are discovery samples. So discovery sample is when we carry out or we look for we review the data, the sample data, unless until we find a single deviation in that data, because that might be a possibility where in the audit objectives which we want to meet out of that review is of a very critical nature. Even one instance could lead to a major risk to the company. Maybe a major non-compliances. For example, it happened in the financial institution where I've seen that money laundering to any illegitimate person, maybe to a terrorist or maybe a country which is under embargo or a ban list from the US. If you made a transaction with those kind of countries or an institution or a client in that country, it might lead to major legal complication within your country. So in that, we can use an approach of discovery sampling, which means that it is not fixed, but we will look at the data till we find deviation, and accordingly we can look at what is the deviation rate. Maybe it's material, maybe it's not material. Are we supposed to go further, or we can stop there? The other way is stop and go sampling, in which again the sample size is not fixed, and the auditor reduces the sample size if he believes that the deviation is within the acceptable limits. or increase the sample size if he believes that the deviation is not in the acceptable limits, just to extend to see that to what extent that gravity of issue is there. In terms of variable sampling, we use where we have a continuous number, where we have a lot of data or information or transaction, where we have to review a value or a quantity and to give our opinion on, for example, account receivable, accounts payable values, or we could be looking at the number of stocks. So in that case, the best sampling approach is using variable sampling, and it is mainly used for substantive testing. In variable sampling, we use both upper and lower limits, which is that the threshold under which we can believe that to what extent it is acceptable to have a deviation and to what extent it is not acceptable to have a deviation. Accordingly, if we have to adjust our sample size. Similar to attribute sampling, the variable sampling size, under that approach, you can determine the sample size based on the confidence level. If you need to have more confidence towards the population of the data, you have to increase the sample size. If the population of the data is huge, then you have to get a bigger sample size. Tolerable misstatements, if you are less tolerable, then you have to increase the sample size. If you are more tolerable towards or you are more confident that the data will be good representation of the population, then you can reduce your sample size. Standard deviation, again, if the data has a higher standard deviation, which means that the data is dispersed and they are dispersed against the average number within the data sets, then you have to increase the size. If the standard deviation is less, that the variability within the data is less, then you can reduce your sample size. Cost benefit analysis is also important, because getting that data, reviewing that data might be costly and time consuming. So you can use the value which you will be getting or meeting the objectives after reviewing the data should overweight the cost. The benefit, it should always overweight the cost of obtaining that data, reviewing that data. There are different approaches within the variable sampling that we can use to determine the differences between the value in which we are reviewing and the actual recorded amount within the company. So we apply variable sample different kind of balances, for example the account receivable balance. So based on our sampling, the obtained number of customers which we have obtained, and we found that out of 1,000, our sample was 100,000 customers, and within that 100,000 customer, the account receivables amount is understated by a certain number. Then we divide that certain number to total number of the total number of customers that we have reviewed, and then project it to the total number of population. This method is called mean per unit estimation. We will look this in detail through calculations in the coming slides, so do not worry if you do not understand, but just to understand that we calculate this in the difference based on per unit and then project it to the total population. Difference estimation is also similar to that, but here we look more at the differences, the variation between the actual audited amount and the numbers which are coming and the overall population, and then accordingly we try to project not based on the total number of units, but a different way through which we try to project the differentiation on overall population. The third approach is about variable sampling, is about the ratio estimation, in which we just look at what is the percentage of the error in a given sample, and then we project that percentage to the overall population. So here is the example which I would just to show that how we can apply all these three concepts. So the first few information which we have, that the book value which the company has recorded of the overall population of account receivable is 3.5 million. Out of 3.5 million, we selected 172.5 thousand of amount in our sample to review the customers and check their balances. And based on the balances which we check with that customer of which has which comprises the total amount of those customer balances comprised of 172, we came to know that their actual balance is, after maybe the customer confirmation or through source document, that it is basically 168,000. So which means that they have, based on our audit value, it is lower than what the company has recorded. So the total population was, there were 3,400 customers. However, we sample only 150 customers balances. So now we will apply to this data this scenario through all three methods. First of all, let me tell you that which one is good, which one is bad. It's based on the auditor's judgment. So there is no one way. It is just to get an estimation of the gravity of the issue within a population or an audit finding. So you can use either of or among any of three, or use all three and see which one is more suitable to the situation, and then you can report your finding based on that calculation. So mean per unit estimation, when we are calculating, what we will look at, that our audit value was 168,000 for 150 customers. So by that we get it $1,120 per customer under value, and then we simply multiply to the total population. Then we get the total population of 3.8 million. Accordingly, based on our working, the amount is underestimated by $308,000. How? Because when we apply that that amount to the overall population, we came to know that the book value of the overall book value of the overall customers should be 3.8 million. However, it is only provided for 3.5 million, which means that it is being underestimated by 308. So through this calculation, we came to know in the given situation that the overall value is being underestimated. Through different estimation method, what we will do, we will take 172,000 of value, divide by minus 168, which is by which we will get that how much was the difference. 4,500 was the difference in 150 sample. So we get it a difference of $30 per sample, and then we project that $30 by multiplying to the total population, and we get it off by 102%, which means that the correct balance of estimation is 3.3 million, and overall it gives us an overestimation of by the management by 102,000 in their records. The third method is the ratio estimation, basically where we look at 168 was the actual audited value, whereas the management has booked in the accounts 172, which becomes like 0.97%, or which become like 97%. So we discount the overall value by 97%, and through which we get it like the total amount should be 3.4 million, their total account receivables. However, the management has booked or recorded at 3.5 million, which is our estimation by 91,000. So if you look at, there is a variation in the number, even the understatement or overstatement. So therefore you can use your best judgment to ensure that which methodology is good, because overall at the end of the day these are judgments, because you are using your judgment to project that issue on the overall population level. And obviously when you highlight such kind of audit findings to the management, they become more critical, they look into more detail in the data. There might be possibility that you are not 100% accurate, but then the management job is to fix the problem. Our job was to identify the issue and to give a rough estimation, because we have a time constraint, we have resources constraints, so we cannot go to the last digit accuracy. We can aim for, but we cannot. But the overall objective is that the data, the recorded data is either under or overestimated through different means of sampling method, and the management has to take the corrective action in order to ensure that they should record the correct amount and verify those data. So you leave it there, and the management job is to justify themselves and to rectify those errors within the record. We use statistic to even ensure the quality control. So we have statistical quality control, by which we look at the tolerable limits within a deviation that could be acceptable in a production line, or in a health and safety, or in the quality of a product, or the rejection rates. Because sometimes what happens that when we can go to nearly zero error, but then the cost of deploying that control might overweight the benefit, and our product might become more expensive, or our services become more expensive for the end consumer, and we might not be able to compete. Therefore, it depends on the nature of the services which we are providing, or the kind of a product we are providing, that we can determine certain level of range under which we can say if the error rate, or if the production loss rate is within 2% to 4%, it's tolerable. So that we can use as a guide to check whether the quality of the services which we are providing is up to the mark or not. For example, in the telecom sector, when I was an auditor, we look at that when the signal drops within that area. So if the signals drop by, or the services is not provided by a certain range that is acceptable by the telecom authority, but if it is for the extended, then they have to compensate to the customer, or they face regulatory or compliance issues by the regulator that they are not up to the mark. It could be same apply in the form of to what extent we have to ensure the wastages or health and safety issues. If it is in certain parameters, then we can say it's acceptable. If it is not, then we have to take a strict action to bring it to those acceptable limits. We can take the help of different charts in order to control the quality, and these charts basically give us upper limit or lower limit or acceptable range under which our deviation, if it is false, then we say it's acceptable. If it is beyond that, we can say it is not acceptable. For example, in this simple chart, if you can see, there is a dotted straight line. That lines represent acceptable level. So any error which is beyond that, it is unacceptable, and then we have to treat it and bring it back to the acceptable level. Variation is basically why those deviation happens. It could be due to multiple reasons. It could be by chance, just randomly happen, maybe a random breakdown of a production, and our production capacity reduce, or the production run rate reduces. It could be through an human error. Maybe someone is not skilled enough or made a mistake. It could be through measurement, that we did not properly measure our targets properly, and accordingly we run the production line, and accordingly we come to know that we were We were slow at our pace, but expecting more products out of production line. Could be any other reasons. Maybe our data is wrong. It could be for any other reasons, but those variations we have to investigate, we have to review, we have to study in order to bring those deviations or those variations within the acceptable limit of range. Benchmarking is another way by which we look at this. I will try to give you one example. For example, in the telco, what we did, we look for our operational expenses, OPEX, and the capital expenses, CAPEX, and review. We hired a consultant who carried out an extensive study of all telecom company or all major telecom company, and they determined that how much in the industry the telco companies are spending on the capex and how much they are spending on the opex, and they obtain the data from us, and they benchmark against standard practice that are we spending more on our capex or are we spending more on our opex. Maybe we are paying more towards the salaries, or maybe we are paying more towards maybe other operational expenses within the company, and that give us an idea or a hint that are we losing on our competitive edge with our competitors, or what's, just to get an overall idea that how we are how efficiently we are running our company as compared to other peers. So that is called benchmarking. Cost benefit analysis we can perform in order to assess the quality control, where we look at the benefit which we are driving is more than the cost of deploying that control or carrying out those substantive testing. There are some different diagrams or charts that we can use. One of the chart is Pareto diagram, which we can use to assess the overall issue in our data sets, or the findings, audit findings, which give us basically the concept is 80-20 rules, which means that 20% of the major issue basically results in 80% of the effect on the overall performance. So if we manage the 20% of the bad employees within our company, 80% of the HR issues will be resolved. If we focus on 20% of the production issues, then 80% of the issues in the production line might be resolved. So 80-20% concept goes with that. And here, this graph, try not to understand too much. It's just a graphical presentation of how does it look like. Again, to assess the quality control, you can use the data and chart out in the form of histograms. Histograms have a thick bars, and each thickness of the bar is equally distributed in the graph because it shows a regular interval. For example, the grades from 10 to 50, 40 to 50, and then 50 to 60 has a fixed interval of 9 or 10 marks within that one grid, and it shows that how many number of people has obtained how much of marks. So this is just to reflect the data in the form of histogram. The other famous way of displaying the statistical data for quality control is to see what is the effects, and then what are the causes, what are the issues that lead to happen that thing. For example, if there was a fire hazard within the company, so there might be there are certain causes that lead to a fire hazard and eventually shutdown of the premises. What could be that the people might not be well trained in terms of fire safety, that they cannot smoke in certain designated area, certain sensitive designated area, or they might have a designated area to smoke. The people might not be well trained in how to carry out a fire drill, or there was no fire drill, so people doesn't know that what data or what information they have to take, or how they can safeguard themselves or other colleagues when in case of any fire. There could be no sprinklers within the premises, or no fire alarms, or the response time to notify a fire brigade might be delayed. So there could be multiple causes for one issue or one big issue, and that can be charted out in this fishbone diagram. And it is just a presentation and which says that all these small causes lead to one big effect, and they are all somehow interlinked. So this is just a graphical presentation, and this is also a way by which we can display our data and to assess the quality of a process and identify any issues within that process, and try to mitigate those issues within the given process. This is the end of this unit, and I personally felt that this was a very kind of a difficult unit within the entire CIA Part 2, especially for those who are not coming from a statistical background, or those people who might be from a statistic background but doesn't know how to apply statistical knowledge in their daily auditing activities, and while carrying on sampling or understanding a different scenarios, different cases where they can use different kind of sampling method. The good news is, in your practical life as an auditor, you have to less worry about the sampling thing, because it will be most probably very straightforward, and where there is more complicated kind of data, you might be having data analysts within your team, or you might have analytical tools which will allow you to select a good sample. So in the practical world, it is less of a worry, because generally in those people who are senior to you, they will have a very good judgment that what kind of information that you can always go and reach out to them. But from a theoretical end, for passing the exam, you need to have a very good concepts of this whole area. You need to know that what is standard deviation, what are these different concepts and terminologies and jargons. And you might not have to calculate, but you need to know the concepts so you can apply your knowledge to different cases accurately and choose the right answer. Just a disclaimer, my voice might not be so good or clear, is because I was affected for the first time from COVID. I'm still recovering. I'm still not feeling very well, coughing in between a lot, but I just I will try to remove from the video. So apologies if you do not find my voice of a good quality, and just pray for my recovery. I never had COVID before, so it's a first experience, though it is not that severe, because I had the vaccination and the doses and the boosters, so it helped me. But now I can relate my feeling with those who are being affected with the COVID. And prayers to everyone whoever is going through any suffering in life, be it health, be it mental or financial, and wish you all good luck. And if you find this all resources useful, please do not forget to to share with other peoples, and share your comments in the description, in the below description boxes, where you can share your experiences. And hope to see you in the next video sometime soon.